The median price for Sarnia right now is 512,000. It was in July, which I mean, there's lots of all over the news. Things are slowing down, rates are higher, but it is still actually 17% higher than last year's median in July. So I would say, although this is lower than it has been in, even 5 months ago, it was
Yeah.
higher than that 17%. It is still growing, and Sarnia is still, in some cases, an untouched market for investors. I just wanted to kind of let all the investors know that now is the time. Move while others are scared. We've had a few months now, if you've watched my videos in the past, where I'm like, I don't know where this is going. Like, you don't want to be blind. It's kind of like stock market investing. Just because it drops 10%, you're not diving in. But now
Yeah.
we've seen a few months. We've seen the fears of the recession. Deals might get better, but if you're in that in-between point, they might not, right? It could skew upwards as well. Inventory is there for multifamily. Investors know I like the multifamilies just because more people to pay your mortgage. But we have over 10 multifamily homes in Sarnia right now, which is high.
Mm. Hey guys, welcome back to the Canadian Real Estate Channel. I am your guest host, and my name is Emma Pace. I run a real estate team out of Toronto called Monstera Realty. Enough about me. We have the absolute Sarnia specialist, Sarah Arseneault, with us this month. This is the fourth month that you've been on the channel to give us a little bit of an update as to what's going on in the Sarnia market. So welcome to the channel.
Awesome. Thanks for having me, Emma. And I'm super excited. As you know, markets are changing. So it's a great time to kind of dive in and give the investors and potential investors watching this channel the lowdown on why you should invest in Sarnia.
Yeah, I'm curious to see the similarities because now I think I've done 4 or 5 of these, and I've seen some similarities across Ontario, but I've definitely seen some differences. So I'm excited to see what you share with us today. So should we pull up the slides and dive right into it?
Yeah, let's get going.
Cool.
So I am going to focus on just the Sarnia area, as that's where most investors want to invest. Not to say that there isn't good deals in the outskirts, but I like to focus just on Sarnia, as that kind of has the most data to pull from anyways. So generally in the past, Sarnia has been kind of, they say what happens in London and Toronto kind of trickles to Sarnia. So it's kind of a lagger. So I too would be interested in hearing what you've been hearing this month to see
Yeah.
if we're on pace or kind of behind. But just a really high level here. The median price for Sarnia right now is 512,000. It was in July, which I mean, there's lots of all over the news. Things are slowing down, rates are higher, but it is still actually 17% higher than last year's median in July. So I would say, although this is lower than it has been in, even 5 months ago, it was
Yeah.
higher than that 17%. It is still growing, and Sarnia is still, in some cases, an untouched market for investors.
Okay. Interesting. We're gonna. I'm assuming we'll talk about rents in a little bit there.
Yeah,
But
for sure.
in terms of kind of like February pricing, do you know where you guys end up peaking out like earlier this year?
I would have to pull it up again, but it's
Yeah.
it's not like it's crashed hard or anything. Like, we're
Yeah.
never above 600. I
Okay. Cool.
believe it was right around the 554. So 550,000.
Okay, so 554. Yeah, so
Yeah.
you're looking at wow, you guys haven't even really pulled down by like 10%. So from what I've seen with, many of these presentations, most markets look like they've pulled down somewhere between 20 and 30%. And so
Yeah.
if you guys are sitting somewhere around a 30K price reduction or something like that, we're probably looking at 7 or 8%, which is actually fairly good in comparison to most markets.
Yeah, and I think what's leading to that as well is obviously as number 3 mentions there, the average selling time is just increasing. So 17 days is now the selling time, where before it was basically 7 or offer date, right?
Sure. Yeah.
And then they're still selling for 99% of their asking price on
Okay.
average. So as long as things are priced correctly, and they're not priced too low, looking to overshoot or vice versa, they are still selling. It's just taking more time.
Yeah.
And I think too, we'll see in the next coming months, but with the average median price, I think those higher price homes are sitting too. So maybe they've sat for a month or 2 months, and we'll see at what point do they want to sell? Do they need to sell? Will that impact the median?
Yeah.
Because our market is, very like, let's say the average prices are between 300 and 700, right? Like that's kind of our range.
Yeah.
So it's easy to stick in that 500 range when, the one of the lower numbers are 300, right?
For
We
sure.
don't
Yeah. Of course.
have a vast range. So I guess we'll see.
Yeah.
But we also have way more inventory. So it's more than 120% higher than last year, the inventory,
Yeah.
which I'm sure you're also seeing across the market.
Yeah, well, we were actually just talking about this, and it's it sometimes can be a hard number to track on how many of those people, and this kind of goes in with number 2 and number 3. How many of those people are relisting their properties, so it looks like it's fresh listings. And so then to me, I'm like, the number of days on market, I actually think for most markets is probably showing as lower than it actually is in reality, because you have some people that were on the market for, like, let's say 50 days, they take the property off the market, they go back at 0 days on market, and now we're taking the average between those two when really it's the same house. So I think that number for most markets is probably skewed, because I just don't think there's a real great way to track it. So if you see an average increase in days on market, I actually think it's probably like, in Toronto, I can't even think our days on market, depending on the neighborhood, but we're probably looking at like 20-ish or so now. I think it's probably closer to like 30, 35 if you actually look at most houses on an individual basis by, looking at how many times they've relisted and stuff like that.
And I agree. We definitely have less, like, don't get me wrong, people definitely do the relisting, but it's not
Yeah.
happening 4 times per listing, right?
Sure.
It's generally like once.
Okay, cool.
Maybe they didn't get their money on offer date and now they're lowering. We
Yeah.
don't see where they're relisting higher. That's not really happening as much anymore.
Okay.
But I'd agree. I'd say the average in my mind would be about 30 days, even
Okay,
because
cool.
now people are coming in like other markets with condition of home sale,
Yeah.
like not avoid that. So in the listings I've had this month, it's like 3 offers, condition of home sale, trying to
Yeah.
help each other out. It's like, okay. So just the time it takes for that too. So
For sure.
people are getting offers, maybe even within the first week, because just by the time they can list their house and try and get it
Sell
sold,
it and stuff like that. Yeah.
it takes time, right? So
Cool. Well,
I
I'm
think
excited to hear about this fourth thing here.
Sure. Yeah. So for those that haven't watched this, Sarnia did put a ban on Airbnb and short-term rentals. There's been petitions, lots of things that have happened over the last year and a half. They are allowing people, basically, if you live in the home and you kind of sign like you get you're on the registry, you pay like, I think it's $50 to $100 a year.
Yeah.
Then you can do it, but they're trying to prevent people from just renting out homes. There was some grandfathering system as well. There was a whole mixed bag of things. If you want to know more about that, feel free to like DM me, anyone watching, and I can get you the resources. But basically, this is a huge touchy point and something I like to make aware to my investor clients as well, who think that they can just, short-term rent it.
Yeah.
In
So
Sarnia,
is there a lot of demand in Sarnia for that, like for short-term rentals?
So I was going to say in Sarnia, it's kind of a touchy subject because we have a lot of chemical plants. So we
Yeah.
have a lot of workers coming from out of town who need furnished rentals,
Yeah.
right? And not everyone wants to live in a hotel, no matter what the cost, right? It's just not happening. So how I sometimes see more people get away with it is the long-term short-term rental, in terms of like it's like a 3 or 6 month contract,
Yeah.
where someone's coming in for work, they're going to be here for 3 months, they're going to be here for 6 months. It turns into not a nightly Airbnb.
Yeah. Because you have kind of like the recreational use of the property, and then you have like corporate housing. And
Yeah.
according to the Landlord and Tenant Board in Ontario, anything over 28 days is no longer short-term rental. Anything under 28 days is a short-term rental. So that corporate housing, it does seem like there's a demand for medium-term rentals, just given the like employment turnover that you guys have with the industry that's there.
Correct. And that's the gray area of what's right and wrong, because that's where we have the issue where Airbnb provided these people that were renting maybe for a month and a half a little more protection than converting over.
Mhm.
Although I will say these short-term contracts, they are paying such a higher price. I'm not sure why someone would want to keep it and and continue as a long-term rental
Yeah.
when you're paying, 3,000, 4,000 a month, whatever it might be.
Hey, if I was a landlord, I would want them to stay long term. It's easier for
Correct.
me.
And yeah, I have lots of friends and investors that have these places, and it started as it was like 4,000 a month, and it was a large home, but it started as a 3-month position, and they ended up staying 2 years. She's like, oh,
Amazing.
please never leave. Like this is
Yeah.
the perfect scenario. Great renters, the money came directly from the company. Like perfect. So that's still a touchy subject for many. I would say recreational use is definitely lower in terms of who wants to be in Airbnbs, but it would be more the workers. So
Cool.
investors, obviously there's gray areas, but you have to make sure you're doing it in a legal way, because you want to make sure when you're evaluating the home and what you're willing to pay for it, that it still works, right?
Absolutely. Yeah, for sure.
Yeah, so that's the biggest thing there, and we can dive more into that via DM or a text for anyone interested in knowing more. But to look at kind of the MLS residential market activity, I'm definitely seeing, like, even just besides MLS, like definitely less people being like, oh, off market deals. Like there's less and less of them, especially as people are like, I need all I can get. And now
Yeah.
people, I feel like, are starting to be like, oh, I won't get as much at private sale. Like they don't even want to buy it, right? So a little bit
Yeah,
of
the private side of things is challenging. You need as much market exposure as you can possibly get. Like to get showings in some markets, we're not even
yeah.
talking offers. We're just talking people to come to the door is challenging. I think over the last couple of weeks, I would say I've noticed that maybe like I think the market sentiment is maybe a little bit more optimistic than it has been. So I've seen some showing activity increase. Now we're at the end of August, so that's probably going to be pretty slow for the next 2 weeks from a data perspective because everybody's still drinking beers on patios and wrapping up with Labor Day. But yeah, like the private sales side of things is challenging. Like if you have it on the open market, it's still challenging to get people to come through. So I agree with you on that.
For sure. And I think, being in real estate, even a year ago, let's say you'd have your clients come to you and they'd be like, I found this great off market. I already bought it. And you're looking at them like, you paid a lot of money, but they are just trying to avoid those bidding wars,
For
right?
sure.
And
And
now, when someone would be projected the same day, they'd be like, oh, hey, that'll sit for weeks on, the market.
yeah. Yeah, it's interesting to see. It's funny because we just wrapped up with Colby's shoot there, and we were talking about market sentiment, and we can talk about numbers like as much as we want, but one of the biggest drivers for the market is the sentiment and how confident or not confident people are in the marketplace. And so we talk about people looking for these opportunities and paying a ridiculous premium just to avoid the bidding wars, and then we've also talked about how things are sitting for 30 days with the sale of the condition of somebody else's house. And so it's like these two absolute extremes on either side. And it doesn't really have to be that way. Like when the market turns, I don't think it's going to turn and go back to like 25 offers. But are you going to lose the condition of the sale of your home as a piece of leverage? Yeah, like that's not going to last forever. I don't think it's going to last
Yeah.
for that much longer, but it's
Yeah.
here now. And so you slowly start to lose those pieces of leverage as we find like that equilibrium in the marketplace. And so I agree with you. It's like the market sentiment around kind of this whole thing and the pros and cons associated. It's not always just price. It's all of the additional terms of the agreement that you get that could be great or not great for you.
For sure. And you hit the nail on the head. It's a great time buy when people are fearful, right? So
Mhm.
as investors, find those deals, those people. I know many people that are like, well, I'm scared of what's to come. So I'm selling now. I'm moving. I'm making my plans now, right?
Yeah.
Fear drives is a huge factor, right? And I mean, we can look at it two ways. Either you're helping them out, you're giving them what they want. It's not always you're giving them a bad deal, right?
Yeah.
Like we are giving the person what they want at the same time.
Yeah, I mean, look, there's a million variables that go into it, and I think most people just say, "Well, it's price or bust," and it's like, nope. Somebody needs to move for work, and they just want to get the property sold, and you're removing this. Yes, they're selling at a discount, but you're removing the sleepless nights. Like they're up every single night because they're freaking out about what are they going to do if they have to move and carry these two houses. Like there's a million other variables that keep spiraling down. So, there's great deals to be had, and you don't necessarily have to feel like you're taking advantage of somebody. At the end of the day, if they didn't want to sell their house, it wouldn't be on the market.
Correct, correct. And I mean, I think we see the fears. Well, both. We see the fears that we have more inventory right now. So, like here, 2022 July, we had 227 homes on the market. As you said, were some of those relisted from June? I'm not sure, right?
Yeah,
Like maybe. Uh, but if we look at the trends, everyone says, "Oh, the market's flooded with inventory." Well, back in 2019, we had more. Like
yeah,
it's not like we're flooded at this point. We're just more back to that balanced market. And in our area in 2019 is when bidding wars kind of started.
yeah.
Not like on every home, but you started hearing of it.
I
Even
think it
though
feels flooded because there's not like you just don't have that buildup of pressure of buyer demand. So it feels like there's this whole buildup of inventory, and you're like, well, it's the same level. It's just we had this many buyers before, and now we have like this many. So it feels different.
correct, those people aren't moving that already have a home because they're scared, like they don't want to get into more debt because of where the market's at, right?
Yep.
But in Sarnia, anyways, we still have a lack of rental housing, right? So the rental prices are still really good. I would say like your 3 bedroom kind of townhouse style can be as much as a single detached because again, there's just a lack of supply. So give people what they get.
Yeah.
But might be between 1,800 to 2,300 a month for kind of a basic, depending on the style and kind of what it's like in a home.
Is that like a
Um,
condo townhouse, or would that have maintenance fees or no?
it depends. Some of ours do, and some of ours don't. They
Yeah.
generally rent for similar or the same prices, though. If
And
there
what would you acquire those for, do you think, like from a purchase price perspective?
purchase price, right now, I mean, years ago they were very different, but right now they're around the 270 to 325.
Yeah, so you're looking good. Like you had to think about it. Like you're looking pretty good.
Yeah,
If you're looking
no,
at buying on the low end and renting on the high end, obviously that's like the dream situation. So I'm
yeah,
not going to say
yeah.
that, but that
Yeah.
is pretty close to the 1% rule at that point.
Yeah, it's not bad. Definitely when rates were lower, they were selling a lot higher. But now again, as people are getting scared, I'm seeing those numbers come down.
Yeah,
Some have condo fees, some only have one parking spot. I mean, it really depends. But even the
for sure.
condo fees in those cases that I'm seeing are less than $300 a month. Like they're
Yeah,
very low, and
yeah,
it really just covers like grass. Like it's not like getting into an apartment building style condo fees. Some are like
yes.
$50 a month. They're very low for what it is.
Not to plug my own channel, but I literally just did a full deep dive on like what maintenance fees are and what they typically cover. So if anybody has questions about like how that works, because I sell a lot of condos, when you're thinking about $300 a month on a condo townhouse, you got to think like, well, what's actually being covered? Is my roof, when the roof has
Yeah.
to go, is that going to be covered? Is like, I own a condo townhouse in London here, and it's, they just did my fence. They take care of my groundskeeping. I think my water's also included, right? So I go, all right, well, if I take all of those things into consideration, and my building insurance is included, so I just have to pay for contents. I'm like, well, I'd likely be paying more than $300 a month for all of the services that I get. So I think maintenance fees get a bad rap because it's like this one lump sum that comes out of your account and you're giving it to somebody else to like pay your bills for you. But I think overall you have to look at the entire package, because we'll say, some of the condos that we sell in Toronto have amazing gyms. And it's like, hey, well, if you're paying $450 and you get a gym and now you're saving $100 on the gym and they're paying for all your utilities and You don't have to pay for lands, like all of these things that come into effect. So I think they can get a bad rap, but at the end of the day, if you're acquiring a condo townhouse and getting the same rents and you're paying less for the thing because it has maintenance fees because other people are deterred by it, it's an opportunity that other people might be looking over.
100%. I know some locally that cover windows. I mean, it's rare, but like there's a lot. And again, like you said with gyms, some people that wouldn't matter to, but if you like going to the gym, it does, right?
Yep.
So different investors, different styles. But Sarnia definitely doesn't have a lot of condos, like in compared to most cities.
Yep.
They're very single family home, which is why I also think with the duplexes and triplex, there's such a opening for investors, because I know, like, living in Toronto myself in the past for schooling and stuff, you want to get in the market as a first time buyer, not even if you're not an investor. You're like, I'm willing to buy that duplex. I want a second unit, just so I can afford that house.
Yeah.
In Sarnia, that's never been the mentality,
Yeah.
because people could get a good job. They could go out and buy that detached home.
Yeah,
So
for
why
sure.
would they want renters in their basement?
Yeah, it's interesting because you made mention to Sarnia is like a legging market in comparison to London and Toronto. And I've always thought that too, because all of the things that I've seen happen in Toronto will usually come to London like 2 or 3, like even from like a design perspective, like it was like the gray paint and gray flooring for a long period of time. And now it's white with like the kind of like sandy oak flooring. And so I would see these like design styles in Toronto, and I would see the trends of where people were getting priced out of, because even when I started, the average condo price was like 200K was what I was selling them for when I started in real estate there. And then I started to see, okay, well, people still don't want condos, but now they're okay with picking up condo townhouses because it's a good kind of hybrid. It's like the next best option or the lesser of two evils. And then all of my friends in London had that same mentality of what you were saying, like, I'm never living in a condo townhouse, like 0% chance. I'm only getting that detached house. And now people are like, okay, yeah, where the condo townhouse is at, I just don't want to live in a high rise, right? So I'm sure with immigration standards, and it's kind of hard to see that now while the market's suppressed, but like if you watch this video in 7 years from now and you look back, people in Sarnia are going to be living in condo townhouses, and they're going to be happy about it.
There's more coming, right? Which will change the pricing. Like there is, I think, 2 apartment buildings, one's to buy, one's to rent, but being built right now.
Yep.
So it will shift, right?
Yep.
As we have less and less land to, build. But yeah, I think that's kind of why it's a great area for investors from out of town as well, just because the duplexes, like I was just talking to someone, a first time home buyer, and he doesn't really care to live in the house. And I was like, well, why don't we buy a duplex? I'm like, the price point is going to be cheaper than a single family home, and you have two streams of income. So, and he's like, I never thought of that. It's just not something that, a lot of locals think of anyways.
For sure.
This one is more contrasted, I guess, my sales activity than this one, where it's pretty even. But you see the fear here. July,
Sure.
We could say, summer market. I know my busiest months are always the fall, even more so than the spring market generally.
Yeah.
But if that was the case, it still should be pretty equal, right? Or it has been in past years. Less listings, less selling, right? But here we're definitely seeing a lot less of sales.
And this is just specifically for Sarnia.
Just for Sarnia, yeah. Okay. Now, the surrounding areas, I'm going to say, is very similar as well. Because everywhere would be like, 20 minutes away, just like smaller towns.
Yeah.
There's just definitely a lot less listings. So
yeah, like you're looking at not quite 50%, but like pretty close to 2020 volume. You're looking at 3/4 of what traded last year. So definitely some suppressed market activity there, but again, actually not as bad as some other markets that I've seen.
Yep. So again, that to me is a good sign. In some cases, if we can make the numbers work, that it is a good time to buy, right?
Yep.
Months of inventory. This is where we've all seen the biggest shock across Ontario, but we're up to about 2.7 months, which to me is a balanced market compared to where we've been at.
Yeah.
Great for buyers, not so great for sellers, in terms of what we've been seeing. But it definitely makes our job interesting, but more talking to our sellers than our buyers. And it's harder to kind of get the sellers onto the same page of realistic. Even my investors a lot, that were like, I'm ready to sell. And they're like, well, I can't afford to sell right now. I'm going to
Yeah.
have to. So figuring out your game plan and getting people's expectations basically of where the market's at.
Yeah. Yeah, for sure. I think expectations are whole thing we could probably talk for an hour.
Yeah, that's a whole other segment.
Yeah.
Most of you that watch the channel have seen this before, but just the breakdown of our area to give you guys more, those that like numbers, where the increases have seen the most, or in some cases decreases. I mean, they're not decreases, but decreases in terms of how much appreciation has happened in the year. So the North End, if you haven't watched the channel before, although you can have rentals in this area, it doesn't often make sense of the prices you're paying right now. This is more like the nice area. It's close to the beach. It's just a higher end area to live for the most part. But if you bought a rental, 5-6 years ago, it still might make sense to rent out in this area. Unless your game is to get, those $4,000, $5,000 a month rentals,
Yeah.
which you could rent. It's just your likelihood is a lot less, right?
Yeah. So that would be like the north end of Sarnia is the AAA, like high, like the highest quality neighborhood, like best schools and all that kind of stuff.
Correct. So that would be the areas, fancier grocery stores,
Sure.
like that would be the area. So if you are from Sarnia, most people would be like, oh, do you live north end, south end?
Sure.
North end would be the higher end.
Yeah.
So the north end, I mean, overall, it often has the highest prices too. So it went up 14%, which we have been seeing this whole time, where the north end doesn't appreciate as much as it has in the past, just because it always has been a higher end to live, right? So investors aren't really flocking there. Everyone always still wants to live there, but it kind of just goes with the market.
Cool.
Central Sarnia, so that would be like your malls, your businesses, like your downtown core, near the college, that would somewhat encompass. It's good for investors, but I'd say since COVID, it has got a little expensive. So as you see, average, median prices was $347 last year, and now it's $407.
Yeah.
So it's moved up. 2 years ago, I mean, this was more where investors could buy a house. It was $250 to $350, and still make those rent prices make sense. But now, unless it's a duplex, like you do see a lot of duplexes and triplexes in this area, it doesn't make sense to buy in often cases like those single family homes.
Interesting.
And it's appreciated, 15% over the last year. South End, this is where a lot of investors, you see flipping. They're probably in the South End. This is the area where, 20 years ago, it's like you live in the South End, like that's the worst area. There was a few bars, more criminal activity. It's still low compared to London or Toronto, but this kind of got this rap. So in this area, you found a lot of older homes that needed a lot of work. So COVID has been a great time where, one, investors have came and flipped them. And two, if you can't afford anywhere else and you want a single family home, where are you going to move to?
Not a bad price.
Yeah. So a lot of people are living there, right? And that's what it's revitalizing the area. So the average price right now is $337,500, which is down. I'm going to say I definitely saw some in this area selling in the 400 range, peak times a few months ago. I would say everyone thought that was crazy, that had lived here for 20, 30 years. They're like, that's really high. I mean, they redid them, nice homes. But I'd say 337.5 is definitely more of a balanced market in terms of that area.
Cool.
But
where are all the factories and everything located?
Okay, so if we zoom this out, you would go south more, and then you would hit the Corona area. So if you follow the water there, that's the way. So it is convenient if you work in the valley. It is closer to the industry, but it's not like you see all the industry. I mean, you might see a few gas plant, things like that. Yeah, but it's not like there's a flare from my backyard. That's not the case.
Okay,
in
cool.
that whole area. Sherwood, people used to love that area. I mean, they still do love that area, but they would buy and rent to students because it's really close to the college. It is also, even though it's South End, it's a great neighborhood because lots of people have kids, right? So that was kind of like a step up from the South End. That's where a lot of the condos we talked about are. So like the Trudeau, it would be a street that has lots of condos.
Okay.
But as you can see that even though it is South End, the average price this year was $466. So you still get a lot of higher end homes, but you pull those nice prices in that area. And this month it went up the most, 24% since last year. I'd say there might have been one or two houses that might have skewed that. I would say it should be a little lower than that in terms of how much it's appreciated. But
Yeah, so I was gonna ask you about that then. So if we're talking about the industry being south of this little quadrant that we're
yep,
looking at here,
yep.
and I'm an investor and I got to pick a rental. Central and Sherwood are pretty like they're not too far away from each other at the end of the day because you said there's probably a couple numbers in Sherwood that maybe skew this up a bit. Um, if I'm an investor and I want corporate rentals, would I be better off in Sherwood so I don't have to pay the North End price and I'm still closer to the industry, or am I thinking about that wrong?
Um, I'd say they're both good. I would say either you want to be Sherwood in terms of anywhere in Sherwood, less Cardiff. Cardiff is
Yeah.
more lower end townhomes, which
Okay.
is where it gets you closer to Central. There's kind of an in between line. Or Central, you want to be closer to the downtown.
Okay.
Only because if you're coming out from out of work and you don't know the town, where do you want to go? Where are you going to eat?
Yeah.
Where are you going to visit? Like you
Yeah.
want to be downtown, potentially near a brewery, near a restaurant, near nightlife, because you don't know anyone.
Yeah. Yeah. For sure.
So I would say like there's definitely like pockets of neighborhoods, but we have to remember Sarnia is so small that I could drive from the south end to the north end in 10 minutes.
Oh, I did not know
So
that.
it's all very close,
Okay.
right?
Cool.
Like it's close. It's not London. There's no traffic jams.
Yeah. Yeah.
So it's definitely a place that I say investors, if you haven't been down here before, come down and explore. You're not
All right.
going to get lost. You can see the areas. You can even see the change just based on how it was built in historic
Yeah.
history.
Yeah. Yeah.
Like, so if you want a more detailed or anyone wants to come and browse, like, let me know. I can tell you more individual neighborhoods, but there's
Yeah.
good pockets for investors in all of these. I'd say if you're in Central, Sherwood, even the South End, like any of those, if you find like a really great deal in the North End, because right kind of in the start of the North End is still a cheaper area, right near the
Hmm.
highway. So
Yeah.
if you can find a great deal and maybe do a burst strategy or something for a corporate rental, great there too. Just make sure the numbers work and it's in a nice neighborhood.
Okay. Cool. I like it.
Now, I think we're basically at the end, but I just wanted to kind of let all the investors know that now is the time. Move while others are scared. You know, we've had a few months now. If you've watched my videos in the past where I'm like, I don't know where this is going, you know, like you don't want to be blind. It's kind of like stock market investing. Just because it drops 10%, you know, you're not diving in. But now
Yeah.
we've seen a few months. We've seen the fears of the recession. Deals might get better, but if you're in that in between point, they might not, right? It could skew upwards as well. Inventory is there for multifamily. Investors know I like the multifamilies just because more people to pay your mortgage. But we have over 10 multifamily homes in Sarnia right now, which is high.
Mm.
So it's high. They're not going. I mean, the deals aren't quite there yet. And I would be the first to tell a client that, you know, you're not getting 5% cap rates anymore unless you have a big portfolio. You need higher, right?
Yeah.
So sellers, I'm seeing two things. One, people that bought when they thought it was a great idea during COVID and realized they're not good at being landlords and are now reselling.
Yeah.
Probably going to have to face a hard reality that they're going to lose money, right? Like they bought at a low cap rate a year ago and now you need a higher cap rate, right?
Yeah.
And I'm also seeing just people that maybe bought 15 years ago and are still going to make great money, but they need to sell, right?
Totally. Yeah, and I think just to your point about you kind of alluded to like, you know, we've been in this for a little while. And I think at the start of this, like to give anybody perspective of kind of like how I think the market feels right now, I kind of feel like when these interest rate hikes started to happen, everyone was in panic mode. It was like the beginning of COVID. You're like, I really don't know what the heck is going on, right? But after a certain period of time, it starts to kind of settle in. You're like, all right, we're just like living, like this is just it. We're just living with this. We've kind of accepted it. And I think the market sentiment is like, all right, they've done so many rate hikes. There's still some uncertainty, but I realize like I can't just prolong this forever. And so people are like kind of just living with the fact that rates are probably getting close to, there's probably going to be some more rate hikes, but there's probably not as many rate hikes ahead of us as what are behind us at this point in time. And so I think the market sentiment is starting to shift. I still think we have a little bit of time to go, but I think overall, like, the bulk of the rate hikes are likely behind us as far as like my research that I've done. Again, I could be wrong. I don't have a crystal ball, but I'm just giving you guys an idea of kind of how it feels out in the marketplace right now. So if you want to stay ahead of the curve, at least start doing some get the ball rolling on the pre-approval in your documents and all of that kind of stuff.
Yeah, and I think we can, at this point, because there is still that uncertainty, use that to our advantage. Like, as a realtor, I'm using that to advantage to my clients, right? Like, oh, I know you want this much, but
Yeah.
how can I can't accept a 6% or a 7% cap rate. I need 9 because
Yeah.
where are rates going?
Yeah, for sure.
Like, and the seller needs to sell, like, even in the single family homes that I'm buying for normal clients, like, great. But by the time you want it to close, my client has to pay more in rates.
Yeah.
So, and it's working,
Yeah.
so
Yeah, for sure. I mean, look, everybody wants to put a deal together in today's market. It's not as, right now, it used to be sellers versus buyers, agents versus agents. And right now it's like everybody just trying to do what they can to put a deal together. And I think people are like probably the most reasonable that I've seen in a long time about being willing to kind of like hear the other side out.
mhm.
So yeah, I agree with you in that regard. I mean, play to your strengths, know who you're up against, and I think there's a really good opportunity to create some win-wins for both clients, whether you're representing the seller or you're representing the buyers. There's a good opportunity for you to put a nice deal together for your clients at the end of the day.
Yeah, just time to get creative and kind of see the pain points of both sides, right? And figure out what people really
Yeah,
want, time or money.
there you go. Yeah, and if anybody here wants to get a hold of you, Sarah, where can they find you?
Yeah, so the easiest is at She Will Sell It. So that'll get you to Instagram, Facebook, or reach out to me. My cell is 519-328-1467. And you'll be able to find me, or shewillsellit.com.
Awesome. I like that. And with that, that's a wrap on the Sarnia August market update. If you found any value in the video, please give us a thumbs up and a subscribe, and we will see you guys in the next one.